Hello traders, the title of the video is how to analyze waves when they form a curve. This is the question that an Elliott trader did ask me in the comment section. An essential question, excellent question. Farid is the trader who asked the question, and I did ask Farid to send me the chart, which he did. Beautiful drawing with trading view, trading software. Another trader also was talking to me about trading view, and I said, well, I'll stick with my TC2000, but I will look at trading view one more time. You see the line he draw here? It's a curve, isn't it? All right, parabole, as we say in French. It's a parabole. See here? All right, it's a curve. So how do you count wave when the wave, the price is forming like a curve? The challenge that the trader is facing also, there is another chart here about Bitcoin. Hold on, please. This one here. This is another chart that the gentleman said. This is about the Bitcoin versus the dollar. You can see here that the price is coming down. Again, you can see the curve here. Can you see the curve? Forming a curve like this. So the gentleman is saying that it doesn't look like a clean cut for Bitcoin. It doesn't look like a clean cut, all right? A triangle, and it's not also a parallel channel, all right? You know, normal channel that we draw. So the price is confined in a kind of a curvy triangle. But it's not a perfect clean-cut triangle. What is going on here, and how do we count wave? That was a difficult question, Farid. I should charge you for that, but because we are friends, all right, let's talk about it. It's an excellent question. Why? Now, you want to understand first why the price is forming the curve before we talk about how we count the wave. The reason why the price sometimes will form that beautiful curve is because of the moving averages. So Farid also spotted something very important. He was saying that, is it because of the algorithm trading tool in the financial market? Yes, it's part of it. The reason is, you see here, I have the moving average 20. You can see that they were buying along the moving average 20. So because of the curve of the moving average 20, you can see that the price was also forming the curve as they are stopping the price going below the moving average 20, forming that kind of curve. So the trading algorithm, all right, this is what I say to traders. A lot of traders hate moving averages. I say to them, well, keep hating the moving averages until you understand what's happening in this messy market. So they are buying along the moving averages, creating the curve, okay, duplicating the curve of the moving averages. That's what's going on here. Again, if you look at the second chart again, here you can see again, all right, they were buying again, okay, along this here. If you see a moving average 20, you buy again the curve. That curve is duplicated at the top here, or sometimes they will be selling along another moving average. So the price may be turning down, forming a kind of curve. So I'm not saying that that is the only reason why the price is forming a curve, all right, but this is one of the reasons why the price may form a curve. Moving averages, people buying along moving averages, stopping the price to go below or above the moving average can create a beautiful curve. All right. So now we understand it. Another reason is that if the price is going very fast, all right, the price is very bullish and it's very, very fast, which means there is no room for the price to go down very much. So it will go down very gently, 38.2% or 23.6% retracement. So it goes up a bit, pull back 23.6% or 38.2%. So it's not coming down very much. So you see here, it went up, come down a little bit, went down, come down a little bit, move down. It's very bullish. They just want to buy it. It's like load it. That can also create the curve. So instead of the price pulling back in another manner, creating a pullback before going up, it will just go in and continue to go up. All right? So how do we count wave? All right. The simplest way, so if it's difficult for you to see the wave on the time frame that you are on, the first thing that you must do is to highlight the corrective wave. So the corrective wave will be the one pulling back to the moving average 20 or moving average 30. If it's forming really a curve, you will suspect that they are buying along the moving average 20, sometimes the moving average 10. if it's very, very bullish. All right. So you want to check, place those moving averages on your chart and highlight the corrective wave. So the corrective wave will be the one pulling back, you see here. So highlight the corrective wave. So highlight them first. So those will be the first one you want to highlight. Where are the corrective waves? So that will be a very helpful question that you must ask. Where are the corrective waves? So there's one here. There's another. Okay. There's another one here because it pulled back. So you see them, and you see all the corrective. You see this one couldn't touch because if you look carefully here, probably it was retesting the moving average H, all right, or 10 here, very, very fast, all right. So once you identify the corrective wave, you'll be able to see what can qualify as, okay, impulse wave. But what is likely to happen is that the third wave or the fifth wave, even the fifth or even the first wave, generally the impulse wave, talking about first, third, and fifth wave, will be complex impulse wave, which means they will be subdivided into 5. All right? In a curvy, okay, price progression like this, you are likely to see, you see here, this is a complex first wave. So here, 1, 2, 3, 4, 5. Yeah, this is the first wave. You see, you are likely to see the impulse wave being a complex wave. Now we have a second wave pull back here. All right. Now we have again 1, 2, 3. Where are we? Where am I? Okay. Again here we go 1, 2, 3, 4, 5. Third manual wave. Okay. And then fourth again. And then again here again it's not very clear. Here we can't see the internal wave. Now again the fifth wave. Now what I'm talking about here 1, 2, 3, 4, 5. Those are the internal wave of the third wave. So the third wave has started here, all right, and has stopped here, all right. That third wave is also subdivided into 5 manual waves. Again, those 5 manual waves, the green one, are also subdivided into 5. The third wave subdivided into 5 manual waves. And those manual waves are also subdivided into 5 manual waves. So we have a double manual waves. Manual waves of the third wave itself, and manual wave of each impulse wave of the manual wave itself. 1, 2, 3, 4, 5. First manual wave of the third wave. Second manual wave of the third wave. 1, 2, 3, 4, 5. Okay. Third manual wave of the third wave subdivided into 5. Again, fourth wave. And then 1, 2, 3, 4, 5 forming the fifth manual wave, the fifth manual wave of the third wave itself. So generally, when you see that it's going in a curvy mode, highlight first, okay, the corrective wave. Those are the pullback, retesting either the moving average 20 or moving average 10. So highlight them and then break it down. The next thing you need to remember is that most of the impulse wave will be complex wave, which means subdivided into 5. Even those manual wave or those impulse wave can also be subdivided into 5. Will that be helpful? All right, this is price going up. Okay, you give me another chart, also this one here. All right, now the corrective wave are quite difficult to trade. All right, they are difficult. So here it was going up. This one, Amazon was going up. This Bitcoin. Now you are on a daily chart. I'm very, very careful. We talk about all right, counting wave on the lower time frame and validating blah blah blah. I'm very careful when I'm counting wave on the daily chart. All right. Now I go to the daily chart when I try to find out about the internal wave of the monthly chart. So I'm trying to find out where are the internal waves, okay, of a monthly chart. Then I drop down to the daily chart. But like you see here, you can see that the price went up. Okay, everybody see that? So here you see this chart. So price went up. Okay, this is what I have now on the daily chart. This is what the gentleman sent me. So now I see blah 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 again in a curvy fashion. Again here, you will quickly notice that, in fact, this is a triangle, all right? It's not a clean-cut triangle, so don't worry too much about it. What I usually do in this case, just draw a line down. You are concerned about the 70% of the price action, so don't worry. Some of the price action may go outside the triangle, maybe completely a funny triangle, but just highlight 70% of the price action, and you can see a triangle. don't be too rigid with it, all right? Just draw something that look like it. So price went down first, you can draw a line like this down, and then you draw another one like horizontal, like this, okay, okay, along the price here, and then just draw another one down. It's a triangle, it's a consolidation. As you can see here, it's consolidating between, okay, the line that you draw on the top here, and this one here, all right? It's a triangle, it's a correction. So all this blah 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 going on here are correcting this okay impulse move. So what I say to traders, when it becomes too complex, don't try to find out too much information. Get the main idea. All right, the main idea is to get to a destination, which means you will give precedence to the triangle. It is a triangle, a dodgy triangle, a funny triangle, a curvy triangle, whichever way you want to call it. All right, it's something that looks like a triangle. It's not in a normal channel. It's not in a normal triangle, but just see it like it's consolidating. Why? Where is it consolidating? You can see when you draw that line, it's consolidating between that curvy line that you draw on the top and here. That's the most important thing you want to work with in that scenario, because trading corrective way can be messy sometimes, and you want to work with the market pattern, rising channel, declining channel, horizontal channel, or curvy channel, or curvy triangle. And with that, you will pull yourself out of the mess very easily. But if you want to play a smart and try to see everything and label everything, you can miss the whole picture. So in that case, when things become complex, we pull out a stable data, something that we can work with, and those things, one of those things, okay, is the market pattern. That's what you see here for it. So what I'm going to do, all right, Farid, excellent question. So in this case again, the correction you can see here, this is a correction, okay? So this correction, then it bounces up, it's a correction going on here, all right? So what do you want to highlight? All right, very simple, it's just going up and down, that's it, all right? So like now you see here, so if you are highlighting them, the moves, you just say it go from one end to the other end. Don't worry too much about what it did between. You may be expecting 1, 2, 3. Sometimes it may not be a clean cut 1, 2, 3. But all you do care about is that it went down from here to here. Again, from here you see the blah 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 blah. You may be wondering what kind of wave is this? Blah 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 blah. But all he did, it went from here, blah 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 blah, here. So after going up from here, it went up here. And then blah, 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 it come down here. Now, from here, it did all kind of things, try to retest it here, couldn't touch it, pull back, and then here again. So, again, from here to here. So, it's consolidating between the curvy line that you draw there, and with that, it will save you all kind of trouble. Now, I don't want the video to be too long, so therefore, what I will do, I will come back in another video, and when we will look at, okay, Amazon stock one more time, and also Bitcoin. Now for Bitcoin, if I show you now what is happening, because I'm using TC2000, hold on please, where is it? BTS, here it is, okay, New York Stock Exchange, Bitcoin Index, that's what I call here, alright, US Index, yeah, now, this is my monthly chart, okay? You see again, it was a curvy here. Yes, it was curvy on the monthly chart, all right? But as the price start coming down, the moving average 20 start really coming down because, so we'll come back and look at it. This is my, okay? Nice Bitcoin Index on the monthly chart. But if I go to the daily chart, you can see that I don't have data here for the day. That's what I got. You see here? Nothing here to work with on the daily chart. But I can work with the monthly chart, so I'll come back again to the Bitcoin index, okay, on the monthly chart, and we'll go through it. But all in all, understand, all right, yes, the price can form a curvy move, all right, due to, all right, high frequency traders, algorithm trading software that are buying along a moving average, especially moving average 10, moving average 20, even moving average 30 sometimes. But the curve will be pronounced more, will be more visible if they are buying along the moving average 20. All right, you will see that's the case for Amazon stock. All right, now sometimes it's because the price is very, very bullish and it's pulling back gently, 23.6% Fibonacci retracement, or 38.2%. So as the price pull back a bit, people just keep buying it. The price very often will also form the curvy shape during the third wave, because the momentum is very strong. There's no room for the price to turn around. People are just buying like a mad market participant. So strong momentum, okay, can also push the price up big time. All right. So now we know why it's forming that. In order to count the wave and to see all those waves, you want to highlight first, all right, in a trending first, or if you're doing that during the trending first, okay, in an uptrend or a downtrend, highlight the pullback to the moving average 20 or 10. All right. That will help you to quickly find out where are the impulse waves. What is likely to take place is that the impulse wave will be subdivided into 5 minor waves, and those minor waves are likely also to become complex waves. So subdivision, a little bit of pullback, people buy, a little bit of pullback, price full. Everybody want to buy. So as it goes up, people say, bring it back a bit, I want to buy again. So what is happening now with Amazon, you can see that as they take it far away from the moving average 20, they are bringing it back to the moving average 20. Now that's what they're trying to see here. See, come near, because orders are placed along the moving average 20, and trading algorithm can do that easily. Now people understand why I keep talking moving averages, because TSTW traders use moving averages. All right, but in a corrective phase, as you show me now, you show me this another chart that you send me. Okay, see, okay, so you see the curve again. All right, it's not a clean, okay, but you see there was an impulse move which was curvy again. Now a correction is forming again a curve. So you can see that traders that are trading this are very serious. They are just, you see here, they were selling along this curve now, okay, all right, or some of them are buying along here. So there are people buying below here, and there are people selling at the top along the curvy shape up there, and also along the moving average below here. So the price confined, creating another curve coming down. It's gentle move, so they take it gently up, and then bring it back gently up. This is showing us clearly what type of traders are trading. I suspect that there are a lot of trading algorithms trading, okay, Bitcoin and all these kind of things. So this is a daily chart again for Bitcoin, as you showed me before. Beautiful chart. So this is one thing I want to say to traders now, okay. So some traders are saying to me, George, would you like to analyze, okay, Sensex, Nifty? All right. If you are using TradingView, which I like, okay, if you can send me a chart like this, all right, I will review those financial instruments that I do not have the data for. So if you are using TradingView, you have a chart for gold, silver, whatever, Bitcoin, Sensex, okay, Nifty, all right, send them to me. All right. So you put in a comment section first. You say, George, I want you to look at this, blah, blah, blah. Then I'll say to you, and you can mention to me, George, I'm using TradingView, and I'm willing to send you the monthly chart. Then I will send you my email, because I don't want my email to become a public matter. But what I will do now, I think I have to create one special email for each channel, so I can make it public, so you can send it to me. Okay. Put the question there, ask me, and then I will send you the email in the comment section, and then you can send me the chart. But if you want me to analyze a financial instrument, it's compulsory that I see the monthly chart. So I will not get into wave count on the daily chart. I want to see the monthly chart. It would be nice if you have a quarterly chart. If you don't have a quarterly chart, don't worry. But I will also see, if you are sending me a monthly chart, send me monthly, quarterly, and daily chart at least. Better yearly, monthly, okay, and daily chart. Okay, I'll prefer that. But if you do not have a quarterly and daily chart, at least send me the monthly and the daily chart, then I will look through it, okay? Before we wrap it up, or before you run away, so 90 minutes, so reasonable. Another thing I want to mention to Farid is that sometimes the reason why, so if the price is doing that kind of curvy move, there's something that I talked about before at the goo.gl channel. It's what we call diagonal price move, price going, normal progression of the price is diagonal. See here. So the line that I'm drawing on my chart, that's what I call a diagonal progression. If you want me to go over this topic about diagonal, I talked about it 100 times, some traders already know that. So this is a normal progression. As the momentum is strengthening, it becomes strong. So prices are going almost vertical. All right, this was happening with Amazon because it's very bullish. In that scenario, we talk about something we call diagonal move, vertical move, retracement, to the opposite diagonal. All right, this is something that I myself I talk about. So now what I do, I draw like a all right, so hold on please. So the red line is representing the diagonal move, and the vertical move is this one here. So I'm trying to project that vertical line at the beginning here. Then I draw a line to connect that, forming a kind of all right, rectangle, all right, and then I draw the diagonal through that point here. All right. So we can use that advanced trading, what I'm talking about now, with this is advanced trading with our area of account. So so Amazon is going down. This line that I'm putting here now, okay, it's a critical trend line that one must watch. Okay, in fact, I will color it now into pink. All right. Some stock, when they do diagonal move and vertical move, where we see that retracement to the opposite diagonal. The opposite diagonal is from here, from this point here to somewhere here. Generally, we see diagonal move, vertical move, retracement to the opposite diagonal from here to here. But there are other key levels that trader must watch. You draw also a line, horizontal line here at this intersection point. This is another support level. Some stock may not come back all the way to the opposite diagonal, but we stop at that horizontal line right there. All right, and after that we can apply Fibonacci retracement to this section here to highlight the Fibonacci retracement to see those support level, or apply Fibonacci retracement to the trending phase altogether. All right, this is 38.2% level, this is a 50% level, so the zone between the 50% 61.8%. This is a very important zone for bullish cow. Very often they find it very difficult to break below that. All right. So this will conclude our discussion today about how to analyze waves when they form a curve. All right. Use moving average 20 or 10. Highlight the corrective wave first, and then focus on the impulse wave. Impulse wave in that scenario are likely to be subdivided into 5 manner wave. You are likely to see manner wave also subdivided into 5 manner wave. So you are dealing with complex impulse wave. Another thing that I forget to mention is that if it's not very clear, you can use a different time frame. So like now, you see we are on a monthly chart, it's not very clear. This is what I'm saying. If it's too messy, you want to see the bigger picture. So you go to a higher time frame, and sometimes the higher time frame will help you to see all the blah blah blah. First wave, second wave is now in the third wave. So no one will deny that it's an impulse wave. All right. Another thing that you can do, you can also, because now it becomes very difficult to draw the channel because it forms a curve. That's why we talk about diagonal move and vertical move. In that scenario, one can draw a first channel like this. Okay, so you see the red line that I draw. You can just pick one point here, draw a line that is parallel to that red line. You see. So what is happening? The price. This is why we say normal price move should be diagonal. So it was in this red channel first. Now he escaped. He went almost vertical. This move up. The momentum is too strong. It's a distortion to a certain degree. See, that's why they are pushing it down with the correction. Yeah. All right. Okay. All right. So remember also the advanced trading diagram of vertical move. Do the drawing like I did here. And that will be also useful to you. Use different time frame. Pay attention to moving averages. Highlight the corrective wave first. Blah 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 blah. All right. So this will conclude our discussion today about how to analyze wave when they form a curve. I would like to take this opportunity to thank Farid. Excellent question. So as I said, if you have, you want us to analyze another financial instrument like gold, silver, says Nifty, and you are using TradingView, you can send me beautiful chart like this. I don't mind analyzing from those charts if I can see it clearly. I think I can work with, something like this. If I make it a big, I can go blah, blah, blah. It's not very clear, but I can go blah, blah, blah a bit. Hopefully that can be helpful to those traders that want me to look at those financial instruments. If this video has been truly useful to you, please let me know by giving us a beautiful thumbs up. If you dislike it, be sure to mark it down before you run away, all right? If you think this is an essential tutorial that can help other Elliott wave traders, all right, feel free to share with your friend on Google+, on Twitter, Facebook, and Tumblr, all right? If you have not yet subscribed to our channel, or you are watching this video on Facebook, our channel is 24 Elliott Waves, digit 2, digit 4, Elliott Waves in plural. 24 Elliott Waves. Subscribe to them and be sure to click on the notification bell. The reason why you should click on the notification bell is that sometimes we are recording video, we are live streaming video. So when we are live streaming, Google will notify you first and say, George, at 7 o'clock, at 10 p.m., George will be live streaming video. And also 30 minutes before the live streaming will start, Google will send you another notification so you can watch it live with me, and you can ask me directly question as I'm watching it together with you. All right. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to analyze a wave when they form a curve. This is a short tutorial. George, this is not a short tutorial, 26 minutes. My apology to traders. I was thinking to keep it 10 minutes. Here we are, 26 minutes because we want to cover everything. Next time, I'll keep it shorter than this. All right? Thank you for watching, and I will speak to you soon.